Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Richard Clarida comes back for more this morning. Thank you so much for joining Bloomberg this morning.
As always, thanks for having me.
What changed yesterday? The fact, and I understand there's some geopolitical yield going on there as well, but we had fixed income up, yield down, equities to the moon. What was the Fed signaling that gave markets confidence?
I think a couple things. First of all, one could argue that if anything, the FOMC statement itself maybe was a little bit less dovish than folks might have thought. But yet again, the press conference, I think a fair reading of the press conference was that it skewed a bit dovish. Now, again, the move in prices was quite small. The September cut was fully priced in before the meeting. It's fully priced in after the meeting. But this is a committee that cares about both sides of the dual mandate. They've made that clear now in the statement, and they also made clear they're getting increasing confidence that inflation's on a path to 2, and finally that they actually discussed at the meeting yesterday cutting rates at the meeting yesterday. So all in, I think that's what the markets were reacting to, Tom.
Richard, there are folks in academia and in practice in the marketplace that feel like the Fed is already behind the curve, that the real-time data suggests that the economy really is slowing. And by the time they get cutting rates, it may be too late. How do you respond to that?
Well, good question, because I think that is a risk they have been willing to take for a couple of years. Indeed, Chair Powell made that very clear at Jackson Hole in 2022. As inflation has moved towards target from above, they've increasingly, and yesterday in the statement, indicated that they now are looking at both sides of the dual mandate. That said, I agree with them. I think the data coming in are certainly consistent with an economy operating at or perhaps a bit above trend. So I don't think they're in a danger zone here of falling behind the curve. Moreover, they've made very clear that if they do see any softening in the labor market, it looks like they won't hesitate to start cutting. So there's risk management here, agree, but I think they're in a good place.
You undersell this. You got to get some PR, Richard Clarida. Basically, Richard Clarida made modern Columbia economics. He took the heritage of a guy named Stiglitz, a heritage of a guy named Phelps. There was some guy doing fancy math at Princeton. He said, come on up to Columbia. And what's amazing about this is you even teach microeconomics at Columbia still, like Pierre-Andre Chapori. I mean, you got Mike. Well, how does microeconomics fit in at Columbia, unlike the madness at Chicago?
Well, I work in some micro in my classes. I think it's best for all concerned that I stick to the macro. You also mentioned Bob Mundell, who passed away not too long ago. A dear friend and colleague. So at one point, I think we had four Nobel laureates on the faculty. So, yeah.
Let's bring in our Nobel laureate, Anna Wong, with a question for the former vice chairman, Anna Wong of Chicago and Bloomberg Economics.
Yeah, Rich, you mentioned that this committee is one that's very focused on both sides of the mandate. And do you think that going forward, suppose that we do have the Trump #2 administration with what's happening with the potentially higher tariffs, would that factor into the committee's September meeting deliberations or even November deliberations? Should they do preemptive?
Should we just leave the studio right now, Paul?
Exactly.
That was a totally unfair question, Anna. Rich?
Well, first of all, Anna, as you know, I'm a big fan of your work, so keep up the good work. I think Jay Powell made it very clear yesterday. He got a couple of questions. And he said, look, we're going to base policy on achieving our mandate. I think he mentioned he'd been at the Fed for now 4 presidential election cycles. So I don't think it will be a factor. And I'm actually glad they clarified that, because there had been some meme in the markets that the Powell Fed might hold off doing anything to see how the election turned out. And I think clearly he set that aside.
And this was really something. His voice changed. His voice,
I'm
sorry.
Yeah.
This happens, like Mankiw when he was at the White House. He'd get upset, and all of a sudden he'd go into Harvard lecture form when he got upset. Bernanke used to do the same thing. Anna, ask another question to make us look puny, please.
Yeah, I want to push on that point a little bit, Rich. You were there during the Trump first trade war, as was I.
Yeah.
You understand, you were briefed about the inflationary impact of the first trade war, and you probably remember that the briefing was tilting toward saying that the tariffs were inflationary, which didn't turn out to be.
Yeah.
And right now, the mainstream economists, Wall Street economists, are uniformly saying that it will be very inflationary again. What's your thought on that?
Well, there are a couple of things. First, if anything, during my time at the Fed before the pandemic, inflation is running a little bit low. The main thing that emerged at that point in 2019 was that the trade war, concerns about the trade war, were very negative on economic activity and sentiment. I do think the details will be important. I think that in particular, there would be an inclination, depending on how they're structured, if there were tariffs, to try to distinguish between if it's moving up the price level like a value-added tax, whereas it's inflationary. But I think the key thing for your listeners to bear in mind is that's a decision the Powell Fed does not have to make now. They made it very clear. 2024 rate decisions are based on 2024 data and outlook. They'll have plenty of time to reassess and think about this as they go into 2025. So, good question, but I don't think it'll be a factor now.
You defended William McChesney Martin. Paul, one more question in this section with Rich Clarida.
All right, let's assume the Fed starts cutting in September. Then what? How do they prosecute this policy to get rates down? Is it every other meeting? How does that work?
Well, the trite answer is it's data dependent, but I think they've acknowledged that if they cut once, they will be thinking there's more than one cut. We'll get good information on that in the projections. We'll get another set of projections in December. Here's what I think. I think there are basically a couple scenarios. One is a very, very soft landing, in the spirit of the Olympics, sticking the soft landing. In that case, the economy just chugs along a trend. Unemployment doesn't go up. Inflation moves gradually down to 2, and then they can gradually cut rates as inflation falls. Another scenario is the economy slows more sharply, and then I think they can cut more rapidly. I do think the bar right now is pretty high to hike rates, and so I think if the economy gets stuck at inflation at current levels, they may not cut very many times and keep rates at an elevated level. But importantly, it could depend on the outcome of the election. But again, we won't know how that plays out until 2025. So,
Richard Clarida, please stay with us. We've got so much to talk about. I'm going to look it up right now. You can do this on the Bloomberg Professional Service. The FOMC meetings, Paul, there it is, January 29th, after the inauguration.
Okay.
That'll be the meeting. Put that on your calendar, Dr. Clarida. We're going to have you back there January 29. Anna Wong, thank you so much for joining us with Bloomberg Economics. Important questions, tough questions on politics.
Bringing it.
She can ask, we can't answer good questions.
It was Chicago against Harvard there. That's kind of what I was saying.
It's different. There's a different oxygen out there. What a joy to have Anna Wong with us from Chicago and Bloomberg Economics. And we continue with the former Vice Chairman of the Federal Reserve System, Richard Clarida, this morning. Richard, you and I could turn this into a 3-hour love fest. We don't have the time to do that, so I'm just going to cut to the chase. I was busting Anna Wong's chops about Frank Knight, 1921, 134 pages. It's a rite of passage, and it's where we really began to think in the modern era of the unknown unknowns, the idea of what's the mystery that's out there. We have a pandemic overlay we're coming out of. We have an immigration dynamic we don't understand, on the edge of Angus Deaton. There's too many mysteries out. Productivity is a mystery we have. What is Richard Clarida's unknown if you were to sit down with the chairman this morning?
Well, those three would certainly be on the list. I think an additional known unknown is the global fiscal outlook is terrible. 20 years ago, debt to GDP ratio was 40%. It's north of 100 now. Debt service costs exceed the defense budget in the U.S. And so everyone acknowledges that global fiscal paths are unsustainable, but there's no political will. So I think that the known unknown is when and what brings about the ultimate adjustment in fiscal policy, because it will happen eventually. I don't know if it's next year or in 10 years, but I think to me that's the known unknown.
And, I'm of a certain vintage. I've heard that my entire life.
Yeah?
We've had this little clock down in Lower Manhattan that ticks up the debt. I remember that as a kid driving up the east, the east side. And where will we see that, the concerns about global debt?
Yeah. So, excellent point, because why has it fallen? Why have the bond market vigilantes been in hibernation? Some would say they're extinct. And the simplest answer is because global interest rates have fallen by more than debt has gone up. So until recently, it seemed like a free lunch to politicians. Borrow, but your debt service costs go down because interest rates are falling. And so the point is, going forward, interest rates are not going to be as low as they were in the prior 20 years. And so the cost of that debt service will be more evident. And so at some point that will drive a political outcome. But I do agree with you. The can has been kicked down the road for a long time, and it may be a while. But to me, that's a known unknown.
And what is the fix ultimately from a economic fiscal perspective?
It depends on the country, but the usual, if your deficits are too large and your debt service costs are too high, there's going to be some combination of adjustments on revenues and adjustments on outlays. But neither party is running on a platform to address that, and so I think it will not really be an issue in the campaign.
Wei Li was with us last hour, stunning us with a potential 3 handle on China GDP growth. Yeah. I want to go to a guy named Stiglitz, who way back at Stanford started to think about the little g of the growth rate. Olivier Blanchard and Stiglitz have really focused on the fact the global little g growth rate is better than good to sustain our fiscal policy. Do you suggest that we could see a diminished global growth rate that finally upsets the apple cart?
It could be growth, or it could happen through the interest rate channel. Remember, Olivier's famous equation is it's about R minus G. And so if G falls or R goes up... Can
you call Stockholm after the show and say, can we get a shingle out for Blanchard on R minus G? Give it to Williams as well.
Okay, exactly. Yeah.
So what do we do when we have too small a G on R minus G?
Well, exactly. And so if you have too small a G, then it brings forward the day of reckoning on fiscal adjustment. I'll just leave it at that.
Okay, he's being careful, but this is real. Because Italy, there was with their demographics, it was like done, small G's done. And with the revolution of their politics, they've got actually very good G, because you're spending money in that little quarter in Venice buying lots of stuff. Little G matters in Italy.
How about in China, though? I mean, how big of a concern is that for the global economy? Because I'll look at just something like their population. I mean, it's just aging, and it's aging at a much higher rate than a lot of other populations. I don't see that changing. What does that mean for global growth?
Well, obviously, China's global growth has been slowing. We all remember when the number was 7 or 8, then it was 5 or 6, and now it's 4 or 5. So it's a very big economy. So 4.5% growth in China is still a big part of the global outlook. I think the real difference, though, compared to the past 20 years, is the way in which the Chinese economy interacts with the rest of the global economy. Commodity prices, activity. I think everyone agrees the big era of global hyper-globalization is over. And so the way in which Chinese growth drives the rest of the economy, I think, is changing. And it's actually something we're looking at closely at PIMCO.
We mentioned this yesterday. I busted your chops about Lawrence Meyer. Paulie wrote a little small book about the Greenspan Fed, where it was Alan Greenspan and everybody follow. I'm sorry, Hugh Pill, Jonathan
I was
Haskell,
going to bring that up.
Megan Green, and there's that troublemaker, Catherine Mann, dissenting at BOE.
Hugh Pill is the chief
economist. He went against the governor. Why can't your Fed be as normal and human as Catherine Mann's Bank of England?
Well, I will say that the Bank of England, certainly beginning with my good friend and mentor Mervyn King 30 plus years ago, it was a point of pride that their culture did not discourage dissents. And indeed, I think there was one or two meetings when Mervyn was outvoted. In this case, it was 5-4. But when the chief economist votes, it definitely gets the headline. Sure, there are dissents at the Fed. During my time, we had several meetings where there were 3 dissents. But it is the case that in the post-Greenspanian era that you refer to, or Greenspan and then post-Greenspan, dissents among governors have been pretty rare on monetary policy. And that's an entire another show I won't spend time talking about why that is.
You're going to come back tomorrow.
Okay.
Rich Clarida, thank you so much for Jon Ferro, Lisa Abramowicz, and myself yesterday. The Fed decides for Paul Sweeney and all. This has just been very generous of you at this key time for our monetary policy. What are they going to do at the next meeting?
They're going to cut rates.
There you go.
There you go. That's all we need.
We'll leave it there. Eric, be sure that gets on single best idea. Rich Clarida of PIMCO of Columbia. An extended conversation with Wei Li of BlackRock. Wei Li, let's just start with a why. Why do we see price up, yield down?
Well, from the Fed meeting yesterday, I think September is pretty much a done deal. The bar for not cutting is very high. So I think that's what markets got excited. But importantly, the way that Jay Powell framed the reasons for September cut is also why markets are happy with yesterday's meeting. He characterized what's happening in labor market as normalization rather than labor market weakening. And what is going to lead to a September cut that is looking very likely is more around better behaving inflation rather than weaker labor market. So I think that's a good combination for risk assets.
On a y-axis, it's logarithmic. You end up looking at a curve as convexity. Is there literally a short cover in bonds now? Is there literally an equity-like short cover where everybody goes, OMG, yields are going lower?
Well, if you look at the hedge fund positioning, absolutely. A lot of the speculative positions went from short bonds to long bonds. But I would observe that front end of the curve has done better than the back end of the curve. So mainly in response to kind of markets pricing in more cuts. But our concern for the back end of the curve, especially over a longer term horizon, still stays, which is a higher fiscal trajectory, higher term premium, which currently is still in the negative territory.
You know, you've got a great note out here, your weekly note, Wei Li, and I'm looking at your assets in review. You know, one of the best performers is gold here. What do you make of that?
Well, I think if you look at what's been working so far this year as a diversifier is not your go-to good old duration in a portfolio, but rather some of the other assets such as gold, and on top of that, the negative correlation between gold and real rate has helped there as well. Now, having said that, it's really hard to kind of think about gold in the context of a longer term portfolio construction simply because there's no cash flow to discount future cash flow with. Now, having said that, there is a case to be made to allocate to gold in portfolio because of the characteristics that it has exhibited, as you observed as well.
So, you know, the central banks are certainly in focus yesterday with the Fed. Today with the Bank of England cutting interest rates. Traders believe that there'll be another rate cut in November. What do you make of the Bank of England?
Well, Bank of England is very interesting, right? So headline inflation is already at target, but core inflation, service inflation is still somewhat sticky. You can talk about some of the Taylor Swift effect and labor market wage as well. But broadly, we see better behaving inflation, and I think that's what gave the Bank of England comfort to cut rates. We think that there is more room for them to cut than the Fed because of a structurally weaker growth outlook, which is why we prefer gilts over treasuries.
Right. Wei Li, we want you to come back for the next segment. I really want to focus on Asia and China with your immense skill and heritage there. But I got to ask the question. You stumbled into it, and I hope that your badge works at BlackRock this morning. You mentioned gold without cash flows. That reminds me of Bitcoin. Is Bitcoin developing as a gold equivalent?
Well, what we have seen is that it has the ability to demonstrate a huge price appreciation, but also depreciation, right? So basically a lot of volatility. So I think a case can be made, a tactical case can be made for Bitcoin from a speculative kind of perspective, not unlike venture capital type of investment. But again, it's really hard to think about kind of the longer term allocation because there's no future cash flow to do.
There's no future cash flows. I don't know how she gets lunch at BlackRock with that because they're like me first into the ETFs. I'm busting your chops, Wei Li. I'm sorry. Wei Li, what's the character of this bull market we have? The rebound. NVIDIA has gone from a 104 to a 123. Is this an AI celebration?
Well, let's not forget the AI nervousness that characterized the few trading days before yesterday's meaningful rebound. So I think what we're experiencing right now is the cold feet that we're now used to before tech companies reporting earnings. This is the sixth quarter of ChatGPT era, and every quarter they come in, they beat, and markets kind of get reassured. Right. Similar to April, markets got nervous, and then the earnings were okay, and then we continue to go from strength to strength. I think this is what we're seeing right now. NVIDIA is not reporting until end of August, so I think there is still a lot of anxiety, but excitement as well.
Can the 10-year yield go under 4%? And how does our world change with a 3.98 10-year yield?
Well, I think 4%, 3.98, these are psychologically important levels, but we're talking about not far from where we are, right? So given how volatile rates have been, I think it's possible that it can break 4%, especially given the repricing momentum. But I think the big picture here is important, which is number one, rates have been very volatile. Markets have been swinging from one narrative to the other narrative in very quick succession. So I think expect volatility. And number two, once we look through that volatility, we're still talking about higher than pre-pandemic rate levels because of structurally inflationary forces. Let's not forget that.
With us, Wei Li of BlackRock, and of course with all of her heritage from China, her ability to win their most prestigious mathematics event 2 years in a row, extraordinary. We're thrilled she could join us today. Wei Li, in 2015, I walked down the stairs at the Metropolitan Museum of Art, and there, in a phenomenal a show, China Through the Looking Glass, was one of the few extant 1960s Chinese military uniforms. I guess they're extremely rare. And it was from a China from another time and place. There's talk that President Xi wants to take elements of the Mao past and drag it forward. Do you see that in any way, that after the plenum, China wants to revert to a 60s or, dare I say, a 50s model?
Tom, it doesn't take a math Olympiad to see that growth in China is slowing down, right? You look at the latest Taixing PMI print that decreased versus the previous print following disappointing Q2 growth number. To your point, plenum came and went, State Council came and went, and Politburo came and went, and they all paint a similar picture, which is that they would support growth in a kind of bite-sized fashion, including surprise rate cuts, but we're not talking about big bazooka, right? So yes, we're looking at maybe around 5% growth for this year, which is their targets, but there is a huge amount of focus around medium-term reform, and that is a trade-off, medium-term progress versus the near-term
Right.
near-term growth, which is why we have a neutral allocation despite the appealing valuation opportunities in China.
From where you sit and the experts at BlackRock, I just don't want to put this on you, but do you see them going back to the standard formula of state enterprises as being the solution, manufacturing, industrial production, or can they actually jumpstart and make permanent a consumer revolution?
Well, consumer savings rate is one of the reasons why they need to support near-term growth, because coming out of the pandemic, consumers have not really boosted growth the way that US consumers have and European consumers have. And this is really in the context of high youth unemployment rate, in the context of aging population, in the context of still lingering deflationary fear. So consumers are not really kind of picking up the baton, so to speak. And we have seen manufacturing side of things having to do more heavy lifting. So indeed, I think we need to really kind of think about how far consumers can support the economy. And this is also why over the longer term, we're looking at Chinese growth with a 3 handle by the end of the decade because of the structural headwinds that I just talked about.
So, it seems like their policy here of isolating themselves, whether it's from a technology perspective or just an overall economic perspective, whether it be in the context of U.S. tariffs, European tariffs, I just don't see how the Chinese government feels like that is a viable long-term strategy. It would seem like they would want to integrate with the global economy, not isolate themselves. Is that part of your neutral call?
This is actually one of our mega forces that BlackRock has identified: geopolitical fragmentation. Isolationist policies are possible, not just in China, but you look at what's happening globally, you look at what could happen in the US as well. And this is why we're looking at an environment where spheres of influences are moving further apart, fragmentation of supply chains creating inflationary pressure. This is also why, even though we have had the last quarter of inflation better behaving, downside surprises, we think inflation is likely going to actually settle at a higher level compared to before because of frictions coming from isolationism, coming from the fragmentation of supply chain, duplication of supply chain. So really, inflation protecting portfolios is what we're thinking about for strategic asset allocation.
Again, Wei Li, and not to pin it just on you, but the greatest thinkers at BlackRock globally, and I know you've got a huge Asian presence. You just set a 3 handle on a run rate of China growth, I believe. What does that do to Vietnam? Frankly, what does that do to Japan? That's an entirely new Asian regime, isn't it?
Well, what we have seen is whilst the exports from China to the US has decreased, the export from Mexico, for example, to the US have overtaken that from China. So I think there is a restructuring of supply chain and trade relationships that is happening. It takes time, but it is happening. So likes of Vietnam you talked about, but India, and also Middle East and Mexico, for that matter, are likely going to benefit as we think about this fragmentation of geopolitical relationships and fragmentation of supply chains, but elevating on a higher level. So that's one of the mega forces. Other mega forces like aging population also benefit these countries that I just talked about. So really think about international diversification as we think about portfolio construction in the context of everything that we just touched.
Wei Li, I see in the BlackRock research, you guys are overweight Japan. And that's something I haven't heard in a long time.
Yes, we have been overweight Japan for quite a long time. Now we prefer Japanese equities over JGB, Japanese government bonds. What we have seen this week is Bank of Japan indicating that they are likely going to move faster on the path of normalization. And this is important because the destination hasn't changed. It's the speed of normalization that seems to be faster. But my most important takeaway from the BOJ this week is that the backstop is still in place. If data does not give them comfort to move fast, they would slow down. So that's important as we think about the Japan call, but certainly risks have increased because of the faster pace of normalization. I would know though, US dollar, Japanese equities is just 1% lower compared to the peak. So we like Japan on a currency hedged basis for that reason.
This has been wonderful. Wei Li, thank you so much, particularly in the comments on China. Joumanna Bercetche, we are thrilled that she's in Dubai, driving all of our Middle Eastern coverage with the leadership of Horizon in her program there, but far more the spirit of speaking to people across the Middle East. And we speak now with Joumanna about her Lebanon and about what we see in Israel and such. Joumanna, first of all, to your many, many contacts in Lebanon, the tension north of Israel right now, the tension in Lebanon, give us a description of that.
It's difficult to describe. I guess my size speaks for itself. But overall, tension is possibly the highest it has been in the last couple of decades. This is an extremely fraught moment for the Middle East, given the events over the last couple of days and the various fronts that are opening up, not just within Gaza, but of course, now you have a new potential active front in Lebanon after the Beirut strike that took out the right-hand man of the Hezbollah leader a couple of days ago. You have a potentially new front opening up in Iran after the airstrike in Tehran, the same night as the Beirut airstrike. And then, of course, you have the ongoing Houthi attacks on the vessels. Let's not forget about those as well. So you've got multi-dimensional hotspots opening up around the region, and there is serious concern that there is a potential slippage. One miscalculation could have this thing really blow up and end up in a scenario where all sides ends up regretting.
On your reporting on Horizon, as you speak to Emirati leadership, and for that matter, Arab leadership of the Levant, who are they supporting? Who are they focused on here among the various parties?
Interesting you raise that, Tom, because it's very nuanced depending on which country you speak to in the region. Now, don't forget that many of the Gulf countries actually did sign an Abraham Accords, a normalization agreement with Israel back in 2020 that includes the UAE, that includes Bahrain, it also includes Morocco as well. So they've been treading very carefully on the subject of the war in Gaza. Of course, Saudi Arabia as well have been playing a very fine line diplomatically because, as we've been reporting over the last few months, they have been working very closely on a normalization deal that would coincide with the defense deal with the U.S. as well. So they don't want to give up on that. But what the Saudis told us is that essentially they can't push forward with the normalization deal while there are still boots on the ground in Gaza. Other countries, you look at the likes of Egypt and Qatar, well, their role throughout all of this has been to play the role of the mediator to push forward these ceasefire discussions. And I thought it was really telling yesterday that the Prime Minister of Qatar, who also serves as their foreign minister, put out a tweet right after the killing of Ismail Haniyeh saying that it is very difficult to push forward with these negotiations if one of the sides of the negotiators has been assassinated. So I think there's a lot of pessimism now about the future of these ceasefire talks.
And Joumanna, you mentioned, some of the countries, Egypt, Qatar, that are trying to act as mediators, but it appears at this point that Israel has had no interest in pursuing peace or at this moment, even, thinking about their relations with the U.S. Is that a concern in your part of the world?
It's definitely a concern. I think there are many analysts out there who are questioning the full faith of the Israeli government to actually engage in these ceasefire discussions. We know that there have been many diplomatic attempts to push forward with the discussions. Even Secretary of State Antony Blinken has been in Asia this past week, and he gave some comments in Malaysia overnight saying the path that the region is on is towards more conflict. It has to make the right choices in the day ahead because those choices are the difference between staying on this path of violence, of insecurity, of suffering, or moving on to something very different and much better. So the U.S. are still trying very hard to push forward with these discussions. France, Germany or other countries looking to get involved as well. And the feedback from the Qataris is, even though they're pessimistic, they still want to push on. But the other question is, who is going to be representing Hamas? Because two of the most senior figures have been eliminated in the last 2 days.
Joumanna, I got 1 minute left, and I just want to take advantage of your encyclopedic knowledge of Lebanon. I get out a map like an ugly American, and I'm shocked that Haifa is 60, 70 miles from Beirut. The distances, folks, are so short. How far do you perceive that Israel would move north across the Lebanese border? Is it 1 or 2 miles like Syria and Turkey, or do they move into the suburbs of Beirut?
So the short answer is there was a war in 2006, Lebanon 2006, a July war. And on the back of that, it was a very costly war for both sides. A resolution was put in place called Resolution 1701, which dictated that Hezbollah has to move about 30 kilometers away from the southern border north of the Litani River and give up its arms. Obviously, the resolution hasn't been implemented, but the analysts within the community will say Israel are not going to stop until 1701 is implemented. And even the prime minister, the Lebanese prime minister, is saying it's time for 1701 to be implemented. So they just want to push back Hezbollah.
Do you see how Joumanna does that? She stays in kilometers. You know, we're nationwide in America. I think my math is the American hack is 18 miles is what we were translating there. Lost in translation, Joumanna Bercetche, thank you so much, particularly for those comments on your Lebanon. She, of course, delivers Horizon each and every day in Dubai. Joining us now, Wendy Schiller with a history of this, of course, at Brown University in the Tubman Center. Wendy, I think I said to you an hour or two ago, I can't remember, a Tom Hanks movie in A Prisoner's Swap. But as I see the names leaking out, speculation of who these names are, what is the difference between the prisoners America and the allies are getting versus the prisoners that Russia's getting?
Well, the only thing we can interpret right now with the knowledge we have is that Putin values the release of these prisoners, either for domestic reasons, it could be internal politics within his own government. He wants to show, that he can still be a partner with other nations in reasonable negotiations in his mind. And you can say that people were unduly detained in Russia, the American hostages in particular, but nonetheless, he is portraying the image of somebody that people can work with. And I don't think the timing is accidental. I think it's an adjustment to what's going on in the American political scene right now at the presidential level. It's also, I think it reflects a little bit of the stalemate in Ukraine.
Okay, I'm going to go there because you went there, Professor Schiller. Are you suggesting that this was sped up because of the advent of Vice President Harris into our presidential race?
I think that Putin recognizes he wants to be in the mix with whoever wins this election. And he doesn't really gain from being demonized by the Democrats. Biden certainly being what we call old school in terms of sort of the Cold War and a product of the Cold War, was doing quite a bit of that. I don't think Harris will focus as much on that. And certainly Trump doesn't do it at all. So Putin wants to end up somewhere in the middle of that intellectual framing on what kind of partner he can be and what role he plays in the world.
Tom, we have a red headline across the Bloomberg terminal. Correct. Wall Street Journal reporter to be released by Russia in prisoner swap. So again, as you highlighted, Tom, this is a fluid situation.
It's a fluid situation. I really want to emphasize this. We believe at Bloomberg, we don't do rumor, we don't do speculation, but we're going to aggregate in legitimate news sources. And we're doing that right now with the leadership of our Jennifer Jacobs at Bloomberg News. Incredibly fluid situation.
All right, let's move on. Wendy, we're right smack in the middle of this very contentious presidential election race. The next issue, I guess, for VP Harris is to pick a vice presidential candidate. What's the latest on that?
Well, we've heard that the governor of Pennsylvania, Josh Shapiro, I believe, is meeting or talking. You reported that to her team. If I had to guess, I'd say it's down to Mark Kelly and Josh Shapiro. It's easier to take a senator out of a state. Arizona has a law that says the governor has to replace a senator with the same party person, so the Democrats don't lose a seat. And a special election or general election won't be held for 2 more years for that seat. So the Democrats actually are okay if Kelly leaves Arizona. But Pennsylvania is, I think, a little trickier to estimate. Is Josh Shapiro stronger for Kamala Harris in Pennsylvania as governor with the machine that he's built to win the governorship 2 years ago? Or is he better on the ticket to bring Pennsylvania, but also other states like Pennsylvania? And I think he's also an observant Jewish person. He has made that part of his persona. It has resonated not only with Jewish community, but also with religious people of different religious backgrounds. He talks about his faith a lot. So whether that's good for Harris or not, we're not sure.
I have never written a song about this, but I'm going to go there, Professor Schiller. 1960, my mother took me out to see Richard Nixon with a 3-day beard, wool, Republicans, cigars. And there were a beautiful spring morning with JFK in a lovely blue silk suit and Mrs. Kennedy next to him. And guess what? The entire uproar where I lived was, OMG, he's Catholic. And to speak to you in Providence and Brown University folks, I hate to say that was a huge deal then. With great respect, Wendy Schiller, are we going to have a huge deal if it's a Harris-Shapiro ticket?
Yeah, I mean, I think that's a factor. I mean, nobody should put their head in the sand and say, someone who's a woman of color and a Jewish candidate. Now, Lieberman was Jewish, ran with Gore
Good point.
2000.
Thank you.
Right. So we've had that before. And you are, not only, Tom, are you right about 1960, but certainly the primaries, the very few primaries that they had, the Democrats, before that, Hubert Humphrey made an issue of JFK's Catholicism. So, it wasn't just an issue in America, it was an issue in the Democratic Party at that time. So, yes, I think, and also let's not forget Israel Gaza and the disaffected younger voters and also people in Michigan of Palestinian Arab descent. How will that play? Josh Shapiro is a strong avowed supporter of Israel. You have to weigh who's going to bring you votes, who's going to lose you votes. If you have to think about neutrality, I think Mark Kelly is a more neutral choice than Josh Shapiro. And Josh Shapiro himself may be thinking of running in 28 if he wins re-election in 26. So very complicated calculation.
Yeah, okay, I got to be quick here. Paul Sweeney, how many times have you seen Top Gun?
Oh, too many to count.
Come on, how many? A dozen?
40, 50
Professor
times.
Schiller, how many times have you seen Top Gun?
I've seen Top Gun a lot, and also Top Gun Maverick, I think actually might be better than Top Gun.
Okay,
so I recommend
you're telling me
you should see it.
The vice president's going to turn down Top Gun from Arizona?
I'm saying that I think it's the same as, it's a more neutral and I think a slightly safer choice for lots of different reasons to pick Mark Kelly over Josh Shapiro.
This has been wonderful. Professor Schiller, you're such a trooper. We're hugely valued. Her civics textbook is definitive, and we're thrilled to have her on to give you a historical perspective of these moments as well. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.